I chose MyTrade because it is complete. So whenever I want to execute a trade, first I would take a look at good fundamentals and whether it's the right time on the technical side. On the fundamentals, we have an experienced research team, and for the technical side, the MyTrade platform provides a lot of tools. These tools really help me in my decision whether when to enter the trade or not. I've had several unfortunate experiences with other brokers. First, I could start with the customer service. Sometimes even, I just want to order an odd lot. I have to email or have to look through the facts. In MyTrade, I would just press the icon below and there's a live chat for the customer service, so the experience is really great. Some brokers would also have downtimes during market hours, so this is important for me to execute my trades, and being down is an opportunity loss for me, and for me that's a big deal in trading.
For Generation Z members who are actually new to investing, I really think that MyTrade provides a really friendly platform for those who are beginning because it's really neat. I really think that MyTrade provides exemplary service in terms of providing research and the like.
One of the reasons why I opened an account with MyTrade was because kay Sir Nicky. I really like yung mga market reports niya. Nakita ko rin naman yung increase ng prices ng mga ni-recommend niya. After nakita ko yon, all the more follow yung mga recommendation niya. Ikaw na naman, naging positive naman yung account ko. I'm still in the middle of my journey on how to trade stocks. I was really impressed. The growth ng portfolio ko. And I highly recommend that you guys might want to also let Abacus manage your money.
I chose MyTrade simply because they have an app. And as a person who is so into technology and apps as well, I find it convenient. It's just within my pocket and I can just check how my stocks are. Plus, the easy part is that you can also deposit money and trade and buy as it is. When I transferred from the previous, the former one that I've been using, now I get to see my stocks better because again, it's just an app. It may not be as big as others may have under their stocks. At least this one I have more visual reference on how it is, so it will motivate you to add more or to buy, to trade. So there's more action to it rather than it's just in a dashboard.
Good afternoon, everyone. We are live for Shifting Paradigms, MyTrade's Mid-Year Market Outlook. Ako po si Cadis. I'm Abacus Securities Online Business Head, and I'm happy to welcome you all in today's event. Did you know that we used to do these Outlook events live and in person? But because of the shifts in technology, we are now able to connect with all of you through the web anywhere in the world. So let us know where you're watching from. Comment your location right now so I can give you a shout out. Kanina meron ako nakita si Esor Aguilar no from Israel. April Sigaya from Taiwan. Ayan. And Andres Benwick from Baguio City. Kamusta naman dyan? Medyo malabig ba dyan ngayon? And Gian Irving from Lebanon. Ayan. Medyo we just have to wait for the others to come in. Pero grabe, no? 20 years ago, I never would have imagined that what we're doing right now is possible. As a child of an OFW, naabutan ko pa yung kailangan mo magsulat ng handmade letters para sa mga magulang mo na on board or nasa ibang bansa. But now we can get in touch with just one click and in an instant. No? Sometimes certain shifts are necessary so we can reap the benefits in the long run. Don't you agree? Before we get started, I just have a few reminders, guys. First, thank you for all of you who registered kasi may purpose yan. We will be raffling off prizes for today's event from those clients who registered in our link. So, nakapag-register ba kayo? Kung hindi pa, please do. And please stay tuned as you might be one of the 10 lucky winners of 500 pesos fund credit for your MyTrade account. Ayan. So, tandaan nyo yan ha. Dapat nakatuto kayo hanggang mamaya, hanggang matapos natin ang program para malaman ninyo kung kasama ba kayo sa raffle winners or hindi. Ayan. And then second, please grant StreamYard permission to see your name so we can acknowledge you properly. Para sa mga suki natin sa mga live sessions dyan, you know the drill na ha. To register your names in StreamYard, just click the StreamYard link in the caption. Doing this will prevent your name from appearing as Facebook user in our feed. So kung wala pa kayong StreamYard link, we'll just comment it in the comment section sa baba para makita ninyo and you can register your name sa StreamYard. Very important yan, lalo na sa ating Q&A. No? Third, we will allow our speakers to discuss first so that you can soak up all of their knowledge and principles that they will share. And afterwards, we will allot proper time for questions and in our question and answer portion. Does that sound good? Okay ba yun? Please comment yes if you agree. Hindi tayo magpapatuloy pag walang nag-comment ng yes. Hintayin ko yung mga yes na comments ninyo. Okay ba yun, guys? Afterwards, we'll have Q&A, ha? All right. So right now, we have, I guess, 120 plus viewers, no? For those who just tuned in, welcome. This is Shifting Paradigms, MyTrade's Mid-Year Market Outlook. Ayan, sabi ni Pons, yes. Sabi ni Andres Benwick, yes. Tonsky Batigas, yes daw. Alright. So, curious ba kayo na malaman kung anong ibig sabihin ng Shifting Paradigms? Di ba kayo na curious man lang doon sa kung anong ibig sabihin niya? Well, let me try to enlighten you. This is a phenomenon. Magpapaka-scientific lang tayo ng konti today, no? It's a phenomenon. It's an important change that happens when the usual way of doing things or doing something is replaced by a new and different way. Excited ba kayo doon? Usually, scientists use this term when current theories can't explain some phenomenon and that results in a crisis. But then, someone proposes a new theory and a new perspective. Here to welcome us today is our CEO for the program. No? He's the living proof of the famous quote, been there, done that. And with over 3 decades of experience in this industry, he overcame not just one crisis, but 2. The Asian financial crisis in 1997 and the global financial crisis in 2008. He is a natural trader, and businessman. And the stock market has become part of his routine. So let's welcome Mr. Paul S. Su, our chairman, for the opening remarks of the program. Hi, Sir Paul.
Hi, Kadis,
The
and
floor
hi
is
to
yours, sir.
everybody. Am I on already? Okay. Well, having seen one and two cycles in terms of deep correction in the market, I know it's not going to be the last one that I will get to see. And so today's presentation by the research people and our technical analyst, Lawrence, um, called Shifting Paradigm, is very important to for everyone to try and hear the point of view of research, especially Nicky's handling the presentation and for Lauren, so that then during times like this, you don't get to panic. No, I think in terms of personal experiences and being a bank trader as well for many years, the first thing I think that matters when you start to worry about the market changing, the economy changing, concerns about inflation, and then recession. Are we going to have inflation? Are we going to have recession? And will the whole economy tank? Some people get a little bit overdone. Um, Really, one should just be able to, first thing to do is to just sit back and look at the market and say, is it going to be that bad? Is it going to be not so bad? And reading the research paper short takes is a very good tool, because then they explain to you in terms of economics how a professional look at the whole market. Now personally, I play defensive. In other words, if I have funds to invest, I would look at particular issues that will not be affected by the present problem. Now, what are the present problem today? We saw, the rising interest rates first, no, and that's a result perhaps of the pandemic, where a lot of money got printed to support the economy, lowering the interest rates. So not a whole lot of businesses will go down under. Clearly, there are some businesses that had gone down during the pandemic. And this is very clear in the US, where they literally printed so much money, and that liquidity into the system has to be taken away or soaked up, and that naturally will be a push to interest rates, no, push it up. Now, unfortunately, we have the war in Ukraine coming in. Medyo nagkandagulo ng konti, no? So interest rates are rising, commodity prices are rising, and so we sit back and say, what's the R market going to be? Should I sell this and buy that, or should I totally get out? So as Nicky's research paper, one of the things, and I only cover one or two examples, is like Semirara. Semirara exports coal, and coal prices manage to stay up high, and therefore, in terms of a foreign exchange problem, you're actually on the plus side, because you're paid dollars, and the peso is a lot weaker now. No? At the same time, what it produces is in demand. No? So power is also in demand. So medyo it's kind of being defensive. No? Then the other industries that you sort of like want to look at is, of course, similarly poised. Every stock that you study has to be that way. In other words, SM Prime, are we going to see the malls opening up? The economy going to open up? Are people going to be spending more money outside? While we have brought down the alert to level 1, and theoretically we should see a lot of people out in the streets, I think the 2 years of being locked up has made a lot of people a little bit more conservative. We understand, except for weekends, I suppose, the weekday business in the malls are okay, but not as good as we expected. No, and this is not only true in our country; it's true in most other countries. It takes time to feel confident that it's safe to go out and to eat out, and to walk around. So it does take time, but I think the things you need to always think through. The industries that I invest in, uh, how exposed is it to the problems of exchange? No, is it an importing company or an exporting company? Um, And number two, are the products that it sells or produce sensitive to spending power uh, of of the market. No? So without much ado, I clearly want you to listen to our presentation today, Shifting Paradigm. Uh, Nicky's been running the research for a long time and is quite respected in the industry. I don't claim to know a lot more than he does. Otherwise, it doesn't make sense, isn't it? The people that we have here, Lawrence in the technical and Nicky in the research, are far more knowledgeable than I am. All I have is just a sheer love and interest for the market. Opportunities to buy, opportunities to sell. So without much ado, I want to welcome you and please follow us because everything that we try and do is to share whatever information and whatever we think is good for you as the market, as how we see it. So, thank you very much, and I'm so happy those who are with us can listen in, and hopefully we share some of our knowledge with you. Thank you very much.
Thank you very much for being here, Sir Paul. This means a lot to us, especially for those who are newbies, to hear from somebody with experience in dealing with market swings. Actually, sir, I just want to highlight what you said is the correction is not going to be the last one that we'll see. So it's important for us to think through and hear the point of view of research so that during times like this we will not panic. No, thank you, sir. Thank you so much for being here with us today.
Thank you very much.
Alright, napakaganda ng ating simula. Unang-una pa lang, madami ng pabaon ng ating first speaker. Very important then he said, when you worry about the changing market and the economy, the first thing to do is to sit back and look closely at the market research reports. They are a useful tool to help you play defensive and by looking at the issues that would not be affected by today's problems. Ano-ano ba yung mga problema na narinig natin from Sir Paul? Sabi niya, interest rates, war in Ukraine, rising commodity prices, and then 2 years of being locked up in the pandemic. Ayan. So, grabe. Opening pa lang ang dami ng pabaon ni Sir Paul. Pero, para mas lalo pang ganahan ng ating mga participants, magpa-raffle na agad tayo, no? So, as I mentioned earlier, 10 lucky winners will be chosen from those who registered for our event. Nakapag-register na ba kayo? Kung hindi pa, please scan the QR code here. Actually, hindi siya QR code. Just check the link, no? So you can register for our second raffle draw. Note that when you register, we will be asking you for your client code, so have it handy, no? If you don't have a client code or a MyTrade account yet, please sign up here sa https://start.mytrade.com.ph. Alright? So, let's announce the first 5 winners of 500 pesos fund credit for their MyTrade accounts. Ready na ba kayo? Baka kayo yung mga nanalo. Alright. So, isa-isahin ko ha. Alexander Hernandez. Ruth Infiesto, congratulations. Jericho Reyes. Edmundo Camacho. And Kevin Kaluban, congratulations you guys for winning 500 pesos fund credit to your MyTrade accounts. Yan, palakpakan naman natin. Virtual clap syempre kasi hindi ko makikita yung mga palakpak ninyo. And then to note, dito muna tayo sa slide na to ha. To claim your prizes, mga ka-MyTrade dyan, to claim your prizes, please send us a screenshot of this winner's slide in our FB Messenger so our team can coordinate with you. Alright? Ayan, dito muna tayo. Hintayin natin yung iba. Baka hindi pa sila nakakapag-screenshot. Ayan. Alright. Thank you. We can take the names down. For this part of the program now, we will do the technical outlook and then proceed with the fundamental outlook next. I know a lot of you are waiting for this too. Let's introduce our first speaker.
Lawrence Gonzaga is the first chartered market technician in the Philippines and the first technical analyst of Abacus Securities. He has 27 years of experience in this field. In 2008, he anticipated the single biggest one-day drop in the Philippine stock market and warned our clients of the potential panic. He publishes the Abacus Super Timer every Friday.
All right, let's welcome to the floor Sir Lawrence Gonzaga. Hi, Sir Lawrence.
Hi.
The floor is yours, sir.
Uh, do we have the slides? Okay. Can we go to the next slide? Okay. Okay. Here we have a chart of the PSE index. This was back in January 2022. That was around 6 months ago. And we were warning our clients that the market has little upside because it's trading below an important trend line that was broken since 2016. That trend line has been in place since 2016. It was broken during the pandemic. Then the market attempted to rally, but 7,700 was a heavy resistance. Then we go to the next chart. Since then, this is what happened. There was a channel that was broken, and market dropped from 7,000 to around 6,000 last week. And we anticipate that the 557 to 6,000 should be a good support level for the market. We see the market potentially finding its footing right now at current levels, especially with some help from other markets which have started to rally. If we follow suit, then we should be seeing a rally towards 6,600 or to around 6,800. I think 6,600 is fairly achievable. 6,800 would be a bit more heavy. The rally last Friday partly lifted some of the gloom in the local markets, but one worry at the back of many people's mind is the environment of high inflation as well as a depreciating peso. If we look at the chart, you can notice that the index is below the 50 and the 200-day moving average line. So this would cause the market to experience selling pressure whenever it rallies. And we expect resistance, as we mentioned, at around 6,600. Next slide, please. Even some of the most successful investors were also perplexed with this kind of market. Like for this one, for example, Howard Marks, he said, "These conditions are not reminiscent of any that I've lived through." So this reflects sentiment of many other people as well, other investors as well. Next. Here we have a chart of the US interest rates. This is a long-term chart. The title paradigm shift is really very appropriate because, as you can see, we have a downtrend in interest rates since the 1980s when the US Fed brought down tried to bring down the inflation by raising the interest rates. And the problem now is that this trend has reversed. We see a breakout of the downtrend. Next slide. Next slide. Why is that important? Because the next chart, we have the chart of the Dow Jones since 1960s. As you can see, if you remember the previous chart, we have a declining interest rates, and this caused a rise in asset prices, particularly the US stock market, which rose from 900 points to the current level. Next. But looking at the PSE index side by side with the Dow, we can see that the local market has been underperforming since 2018. So this continued underperformance was reflected even today. Despite the big rise in the US markets last Friday night, today we have a tempered reaction to that one. Next. Here is an example of past corrections. I drew percentage corrections from significant highs to significant lows, and it seems that the average correction would be around 20 to 25% for each swing. That should bring us to around 5,800. Next. For those who are new to technical analysis, this is an example of a downtrend. When we say downtrend, generally we mean that the stock is trading below the 10-week moving average line and also trading below the 40-week moving average line. If we put this into the daily chart, then it means that the stock is trading below the 50-day as well as the 200-day moving average line. Next. Here we have an example of Ayala Corporation. Recently, the 50% retracement failed to hold. And if we look at the Fibonacci, 61.8% support, 554 should be an important level to watch. The next. Then we have Ayala Land. Ayala Land has dropped significantly, and we see that at current levels, there was an attempt today to rally. Also last Friday, it was holding firm. If it rallies, we see resistance at around 28 to 30 pesos. And the 25 peso level should be an interesting level to watch. That should be a support for the short term. Next. Okay, this is a chart of BDO. We can see that BDO just broke down at 122.50. So around 122.50, expect resistance. And if we measure that downside target, we see 103 as a potential level. Next. BPI, similar pattern to BDO. Next support, 80.2, and there's another support at 78. The chart also broke down. Next. Okay, Metrobank has been holding above the 47 support. After 47, there's another support at 43. But note that all three banks that we mentioned just now are below the 50-day and also below the 200-day moving average line. So any rally would be tempered, and we do not expect a runaway rally. Next. Here, SM, there's a critical support at 737, after that 670. Next. And GT Capital, we expect resistance at 673. That should be a heavy resistance on the weekly chart. And the support after 470 is at 420. Next. Okay, ICT. We were looking at this chart and playing around with the Fibonacci retracement levels, and what came out was it seems that 149.20 is an interesting level. Why? Because it's a Fibonacci retracement 50%, which also coincide with the previous breakout point. So if market experiences further serious drop, ICT can be considered at around 150. Next. Okay, we run some filters, and these 6 stocks are the only stocks that that have 30 billion market cap and above the 200-day moving average line. Why do we use the 200-day? 200-day moving average line is generally used to filter for stocks that are in long-term uptrend or long-term downtrend. If it's above the 200-day, then the stock is in a long-term uptrend. But if it's below 200-day, then it's in a long-term downtrend. So among all the big stocks in the market, only these 6 pass the filter. Next. We put in another filter, that's the 50-day, and that further narrowed down the 6 stocks to 3 stocks: Emperador, Semirara, and Meralco. So we can see that for trend following investors, current market condition is not really ideal for that style. We see upside being capped, and we need to see the trend reverse itself before investing. That's from a trend following point of view. Next. Okay, on the reverse, this is an example of an uptrend. As you can see, the price has been rising generally smoothly, and also the 10-week moving average line is above the 40-week moving average line. So we have a positive crossover. So that setup generally supports a stock. We go to some examples next. Okay, as we mentioned, Semirara. Today we saw some weakness in Semirara, but looking at the long term, at the bigger picture, we see a potential rally to around 38.50 to 39.50. That's where the major resistance levels are. Possible pickup point, ideally around 30. Let's see if 30 pesos holds. But if you notice, the price is above the 50 and as well as above the 200-day moving average line. Next. Okay, Meralco is also one of the more resilient stocks, but there's heavy resistance from 350 all the way to 398. Okay, next. Oh, here are some potential questions that clients have been asking me the past 2 weeks, and I would like to share with you some of the questions as well as the answers. I'm looking to buy. At what level should I come in? 6,000 is a good support. If it breaks 6,000, then we probably would be looking at 5.7. But generally, 5,000 5,700 to 6,000. That should be a good support level. For those who follow Elliott wave, there's an Elliott wave projection that points to 5724 as a potential target. That's the 1.618 times of the previous leg. Where are the major supports for the PSE? Okay, exact numbers 5691 and 5390. What do we expect in the second half of the year? Currently, I see a chance for a potential rally from current levels to 6,600 or even 6,800. As long as the 6,000 level holds, then we'll see from there. But for me personally, I would take the rally to, if ever the market rallies to 6.6 or 6.8, I would take it as a chance to raise some cash and prepare myself for a potential pullback. Remember that this year is a midterms election year in the US, and historically speaking, US market are weak, are usually midterm election years are usually weak. And that election would be in November. And the next question is, what do you look for? What are you looking at to suggest a reversal from up to down? Well, reclaiming the 10-day moving average line at 6.3, reclaiming the 10-day reclaiming the 10-day moving average line would be a good first step. That's 6,300 points. What do I think of the peso? I think peso would probably break the all-time high of 56.50. Potential target 61. Yeah, that's it from my end. And here is a recap of the previous. This is a recap, basically in a nutshell, of what we covered today. That's it, and thank you.
All right. Thank you, Sir Lawrence, for sharing your insights. No, but we'll be keeping you. We'll see you again later for the Q&A. Before we go on to the next part, if you have any questions, guys, please list them down. And daming shinare na insights sa atin ni Sir Lawrence. I'm sure a lot of you have questions in mind. Please just list them down and we'll go through them later in the Q&A portion of the event. Then please don't forget to grant StreamYard the permission to see your name. Go to the link flashed on your screens now or check the link in the comment section para you can register your names and we'll be able to address you properly. All right. So now it's time for the main event. To deliver the market outlook, let's get to know our main speaker for this afternoon.
Raymond Neil Nicky Franco is a certified public accountant and was among the first few chartered financial analysts in the country, receiving the designation in year 2000. He is the only Filipino recognized by Forbes magazine as one of Asia's top 10 best stock pickers, ranking at top 5. He is the head of research of Abacus Securities and the director of its online trading arm, MyTrade.
Hi, Sir Nicky. Good afternoon.
Hello, good afternoon. Good afternoon, everyone.
We're ready to hear your insights, sir. The floor is yours.
Okay, thank you. Again, the title of our presentation is Shifting Paradigms. And I know that Cadiz already mentioned the meaning of a paradigm shift. But to give you another definition, this one is taken from Merriam-Webster. This is a time when the usual and accepted way of doing or thinking about something changes completely, which I believe is very much attuned to the times. So we will be discussing a lot of things that are changing and how this affects our outlook for the market. So let's go on. Let's now go on to the first slide. Okay. As mentioned by Lawrence earlier, the 10-year yield of the US, which is shown here on the bottom part of the chart, recently broke out from a multi-decade downtrend. It's now at 3.2%, and it's generally following uh, the rate of inflation in the US. And in the past or before the pandemic, the thinking was that interest rates and inflation were going to stay low for a long time. However, again, because of the pandemic and then because of the war in Ukraine, we've seen that way of thinking thrown out of the door. Uh, Inflation in the US is already 8.6%, and it's possible that for June it's going to be 9%, and succeeding months could go even higher. So the bad thing is not that this is the highest or fastest use inflation in the past 40 years, which has forced the FOMC to supersize its rate hikes. It's that the consensus is building for a recession um, within the next 6 to 12 months, and there's even rising talk, um, chatter, or speculation of potential stagflation for the U.S. And stagflation, for those who are new to the market, stagflation means that it's a period when GDP growth is low and at the same time inflation is high. So this is one of the worst scenarios for any country and for any stock market. And this could have spillover effects for the rest of the world, especially for emerging markets. Next slide, please. Staying on external factors, geopolitics has also affected the market in the past um, four 4 months, 4+ months, ever since the war in Ukraine broke out, which exacerbated the commodity price inflation that we saw starting in uh, the early part of the pandemic, or in 2020. Now the problem is that the war is likely to drag on for some time because neither side appears willing to negotiate or back down. And the really bad thing is that the world was coming out of COVID lockdowns. The world was looking forward to normalization and economic recovery, and the war in Ukraine simply derailed and complicated and shattered that way of thinking, basically extending um, the global recovery probably into next year. Next slide, please. Still on external factors, China recently has had to deal with its own outbreaks of COVID-19, and um, the thing with China is that they have this zero COVID policy, and they tend to lock down any area or any city or even any province when there's even a small breakout. Small in our view is like just 100 or less cases. They would shut down a whole city or even a whole province with just a few hundred cases. And what happened is that um, a lot of the large Chinese ports had to shut down, and this resulted in the worsening of the shipping container crisis. This led to longer lead times for containers to make their return trip from one point to another. And this caused shipping rates to jump up uh, towards the end of last year. Now, container shipping rates have started to come down, but as you can see there in the chart, the rates are still much higher compared to pre-COVID levels, and this is going to affect companies' operating margins, especially those that are dependent a lot on imports. And this is also going to feed into inflation numbers um, on a global basis. Now, like the Philippines, Japan is sticking to its low interest rate regime, and this is causing the Japanese yen to depreciate very quickly against the US dollar. The Japanese yen is actually the worst performing currency on a year to date basis. And this would normally be good for Japan because it helps them become more competitive in terms of exports. But it could trigger competitive devaluation from other countries. And this could put further pressure on our own currency, the peso. Next slide, please. Now, shifting to the local scene, we know that inflation has recently spiked, and you can see in the chart there that the producer price index, which is the lighter green color, is actually higher now than the inflation rate, the headline inflation rate. And what this means for us is that there's probably a lot more inflation in the pipeline going forward. So we're looking at probably 6% inflation for July. June is already going to be higher because of the jeepney fare hike and minimum wage hikes that have been announced for various regions. The weaker peso and higher commodity prices are also going to feed into domestic inflation. Now, rice, which has been holding back inflation since 2019, could also add pressure because some countries are banning the exports of some commodities like wheat, and also farmers are hurting from higher fertilizer costs, and this could reduce the yield on crops for the Philippines moving forward, and this will also increase the cost of production. So rice could possibly increase over the next 6 to 12 months, and this could again add further pressure to inflation. Next slide, please. Still on inflation, recently Congressman Sal said that 8% inflation is possible. We wouldn't rule it out, but we our thinking right now is that it should be capped at around 6% to 7% inflation. Now, Congressman Salceda has his own credentials. He was a, if you don't know, he was a stock market analyst and one of the pioneers in the local industry. So he knows what he's saying. But our view is that it's probably going to be capped at between 6% to 7%. As you can see there, the pressure is coming from a lot of items. You can see in the chart that pork prices right now are at their highest, even after the government slashed the tariffs on imported pork. Chicken, there's also talk about lower chicken inventories because of the outbreak of bird flu in various countries. So there's more competition for chicken around the world. Malaysia even recently banned the export of chicken to Singapore. And that was a big thing for Singapore because their national dish, the main ingredient for their national dish is chicken. Now, the Sugar Regulatory Authority also recently flagging potential shortage in sugar. The projected production of sugar in the country is going to be down about 10% in this crop year. So again, there's a lot of factors that are feeding into inflation, and we believe that it is still going to increase. And as one foreign house recently pointed out, the Philippines the food imports of the Philippines is the highest in Asia as a percentage of GDP. And because we have this agricultural trade deficit, the impact of high commodity prices is magnified here in the Philippines. Next slide. Much like in the US, the regime of low interest rates has changed dramatically, has shifted dramatically. You can see in this chart that the yield curve for the Philippines has shifted dramatically upward over the past 12 months. For example, on the 10-year, the rate has increased by about 330 basis points. This has made fixed income instruments, bonds, more attractive relative to equities, and that has helped draw money away from the market. And this has also made mortgage rates more expensive, and this is going to impact the property market. As I said, it's negative for property, for REITs, and highly leveraged firms. Next slide. Now, on fiscal policy, you can also see in the chart there that for the longest time, or from about 2004, the country's debt to GDP was trending lower. But because of the pandemic and the need to borrow in order to sustain the economy, the debt to GDP has jumped to more than 60% and is projected to go even higher this year, despite strong projected GDP growth, which we believe is going to be between 6% to 7%. Now, the incoming government is going to be handicapped by this, not COVID era debts, higher debt and deficit to GDP ratios. And according to incoming Finance Secretary Jokno, his priority or the priority of the incoming administration is not to introduce new taxes, but to improve tax collection. Now, that is well and good, but improved tax collection can do only so much. So there's still the potential for additional taxes, especially with the Mandanas ruling coming into effect next year. So in the background of all this, remember that the Philippines is still under credit watch negative from Fitch. So if our debt metrics continue to deteriorate, then this is going to be negative for our credit rating. So if the new government has a lot of new priorities or new initiatives, for example, the incoming administration has said it's one of its goals is to bring down the price of rice. Then, if you're going to introduce, for example, subsidies for rice, then bringing down debt metrics is going to be a challenge. All of this will become clearer over the next 6 to 12 months. And hopefully, the incoming administration will introduce new policies that are realistic and at the same time friendly to our debt metrics. Next slide, please. On the peso, Lawrence mentioned earlier that it is likely to break 56.50, and that's something that we agree on. He also said that the exchange rate could even depreciate to as low as 60 or 61 is to 1 peso, and that's probably for the longer term. Now, that's also within the realm of possibility, especially since, as we can see in this chart, the Fed funds rate and the BSP's RRP rate are headed for convergence. The Fed is expected to raise by 75 basis points at its next meeting next month, whereas the BSP is probably going to end the year at about 3%. And that's also where we think the Fed is going to end up. Or the Fed might even end up higher at 3.25 to 3.5%. So if incoming BSP Governor Medalla, who appears more dovish than Governor Jokno, stays his course, then we believe that indeed the peso is going to continue to trend lower over the next 6 to 12 months. Now, the BSP doesn't seem overly concerned about a weaker peso, but for those who have been trading the market for some time, remember that the Philippine Statistics Authority used to come up with index of leading economic indicators, and one of the indicators there was the exchange rate, and a depreciating peso was considered a negative leading indicator. So peso weakness was a negative in the old LEI index for a reason. Unfortunately, the LEI index was discontinued some time ago. They were supposed to replace it, but so far they haven't done so. So again, we're looking at more weakness for the peso, and adding to this is that the country's current account is going to continue to current account deficit is going to continue to widen. Next slide, please. Now, in terms of liquidity, this is something that we've discussed in our short takes. Liquidity over the past 3-4 years has definitely taken a turn lower. The boxed area you see in the chart is much lower compared to the period from around 2012 to 2017. Now, the box has a few spikes, and actually in early part of 2021, the average daily turnover averaged more than 11 billion. But this was merely because of the pandemic, the influx of new traders, new investors into the market during the COVID lockdowns brought a lot of money, and we don't think that that was sustainable. And I refer to them as actually stock market tourists. These tourists are unlikely to return now that mobility has improved significantly. People are not looking anymore for things to do or to pass the time, like trading in the stock market. And like I said earlier, high interest rates is drawing away money from equities. Um, Foreign participation is down significantly. We will see in another chart later. And the thing about the drop in liquidity is that it has happened mostly in the second and third liners, which we believe is an indication of or evidence of weak investor sentiment. Next slide, please. As I mentioned, foreign selling has been pretty constant since about May of 2019. So for more than 3 years now. This chart excludes the acquisition of JERA of a large minority stake in Aboitiz Power. So since May 2019, foreign selling has reached nearly $6 billion over the past 3+ years. Moreover, the Philippines is the only market in ASEAN with net outflows this quarter, and we really don't see any near-term catalysts for foreigners to return. They are likely to maintain a long wait and see stance with the current administration. Another thing that will weigh down on foreign funds interest in the Philippines is a weaker peso. They don't usually put money to work in the Philippines when they know or expect that the Philippine peso is going to continue to depreciate against the US dollar, because it slashes the returns from their investments in the Philippines. Next slide, please. Now, with any new administration, the first 6 to 12 months are always crucial. It always brings some policy uncertainty, especially with regard to regulatory matters and taxation. As I mentioned earlier, tax administration is not likely to be enough. There are probably going to be higher or new taxes. One of the recommendations of the outgoing Department of Finance, for example, is the rollback of a lot of VAT exemptions, which could impact certain sectors like the property market. This chart shows the percentage of residential sales for each company that are VAT exempt. And as you can see, it's quite significant for Mega World and Vista Land, and it's really, really high for Philinvest Land. So if property sales are taken off the list of VAT exempt sales, then this is going to have a significant impact on the market. The current threshold for VAT exempt property sales is 3.2 million. So anything below 3.2 million is exempt from VAT. So the key events to watch are the submission of the 2023 budget and the first SONA late next month. Next slide, please. Now on earnings, first quarter was quite mixed. Many firms were hurt by high commodity prices, freight charges, and supply chain issues. There's really no there's little point in comparing year-on-year numbers because they are continued to be warped by pandemic effects. Now, the important thing about this chart, as you can see, is that the forward EPS for the PSEI is still well below what it was prior to the pandemic, whereas both the MSCI Emerging Markets Index and the EPS for the MSCI Asia ex Japan are both higher. And in the case of the latter, it's much, much higher. So, again, this is one reason why foreigners are likely to stay away from the local market for some time, because the earnings of other markets have improved and caught up to pre-pandemic levels much faster compared to the Philippines. And we're only for the Philippines, we're only looking at a full recovery for earnings by next year. Next slide. Now, on valuations, for those who attended the briefing at the start of the year, what we said is that the valuation for the Philippines has been, for the Philippine market, has been trending lower. And we said that it's probably going to go down to 14 times forward PE over time. But again, because of everything that's happening, including the Ukraine and Russia war, because of the depreciation of the peso, there has been negative sentiment all around, and the drop to 13.7 times forward PE happened much quicker than we thought that it would. And again, this is another one of those paradigm shifts, because for the longest time, for a long time, the market was trading at 16, 18, even 20 times. And it seemed inconceivable prior to this year that the Philippines would fall back down to 14 times or 13.7 times. But it has happened, and that this new reality is something that investors have to deal with moving forward. And despite the fact that the PE has dropped to 14 times or even lower, the Philippines is still not cheap relative to its peers. In ASEAN, the Philippines is still the second most expensive market. And because of this, and because of the other factors I mentioned earlier, it's even possible that the forward PE could drop even further, to as low as 12 times within the next 6 to 12 months. Next slide, please. Of course, not everything is bad news. This chart shows that the number of new COVID cases in the Philippines and in the world actually has gone down a lot since the Omicron wave earlier this year. Now, the number of cases have begun to tick up, possibly due to Omicron subvariants BA4 and BA5. But we still believe that the world could shift to endemic status possibly by year end, as most of the world will reach 70% or higher vaccination rates by the end of the year. However, the Philippines needs to ramp up and incentivize booster shot administration. The figure recently is that 70 million Filipinos have been fully vaccinated. That means 2 doses. No? However, the number of those that have received booster shots is only 14 million. And because a lot of Filipinos received less effective vaccines, and because of these new variants, then it's possible that we could see new cases continue to climb up as we've been seeing in the past few weeks. It's not impossible that we would see several thousand new cases over the next few months. Next slide. Now, this is something that we also addressed in our short takes report. We believe that revenge spending is just getting started, and the main reason for this is that household debt to GDP as of the first quarter of this year was at 10%, which is lower compared to the peak around 11%. So there's room for Filipinos to leverage and to buy what they want or need. Another sign for us that revenge spending is alive and kicking. If you've noticed, a lot of foreign artists, a lot of big name foreign artists are scheduled to hold concerts in the Philippines over the next 6 months or until the end of the year. We don't think that promoters of these concerts would have booked these artists if they weren't sure that they're going to get their money back. I think one band or one artist started with a 2-night concert, but they ended up extending it for a third, for a fourth, and then finally for a fifth night. You can see the demand for these acts here in the Philippines, and again, that's evidence for me that revenge spending is not at its tail end, but it's just starting. So this is going to fuel consumer spending. This is going to help GDP reach 6% to 7% this year, probably in the middle of that range. Now, another thing to consider is that some stocks, or even a lot of stocks, are at or near their 10-year valuation lows. So there is value in the market, and there are some stocks that are ripe to buy even at current levels, even if we're possibly looking at further downside. As Lauren said, it's possible that we could see 5,800 or 5,700. Another thing to consider is that the rout in crypto might be negative for the market in the near term because it has made traders or investors gun shy, or it has put them into capital preservation mode. But this crypto route could be positive in the long run for the equities market, because this may encourage retail investors to return to local equities. Next slide, please. Now, the question now is when the market will turn. The first thing for us is that earnings visibility must return. As I said earlier, the first quarter earnings numbers were quite mixed, and the market will probably, or earnings will probably, see full recovery by next year. Now, China is important because, as you can see in the chart, growth has been trending significantly lower. And this year, private economists' forecasts for GDP growth in China is only 3.5%, whereas the official target is 5.5%. And the key for them is the property sector. The property sector is weak. There are property companies that are defaulting on their loans. There are property companies who are willing to do barter on their properties just to get them sold. And a lot of household wealth in China is tied up into property. So it's crucial for China to improve the economy, to improve the property sector, because it has a lot of impact outside of China. Growth in China tends to influence growth both in Europe and in um, the rest of Asia. We also have to see domestic and global inflation peak, and possibly we will see this in the second half of this year. Um, at the very least, foreign selling also has to pause. Um, we don't actually need foreign investors to return. There was a time when foreign selling stopped. No, I think it was for about 6 to 8 months, in the from middle of last year. No, and the foreign participation was actually flattish. They were neither net sellers or net buyers of local equities, and yet the local market jumped by 10% over that period. So it doesn't necessarily mean that if foreign investors are absent, then the market won't do well. They just have to pause selling for the market to start to recover. Of course, the new admin has to have credible new policies and initiatives. Um, Peace in Ukraine would be a bonus, but the short answer is that nobody knows when will the market turn. But we believe that the second half would be better, and our view is that the PSEI will end the year at about 6,700. Next slide, please. Now, to start off our key recommendations, we'd like to emphasize that clients should stay invested. Um, I think this graphic is important now because, and this applies to investing as well as sports or any other field. No, when we see gold medalists in the Olympics, for example, or the Asian Games, we only see um, the gold medal. We don't see all the hard work that they put into winning that gold medal. We don't see the passion, we don't see the training, we don't see the early mornings, we don't see the courage that they put into it, the motivation. And when we look at others in the stock market, for example, um, or other traders, we only see um, the gains that they're posting on social media or whatever. But we don't see all the hard work that they put into their trades. We don't see all the hard work that they do studying companies, and they also um, lost probably in the past. Everyone has to go through a cycle in this market. Not everything goes up in a straight line. Not everything goes down in a straight line. Um, it all takes patience to be in the stock market and to achieve your goals. That being said, um, our view is that investors shouldn't wait for the bottom. As I said earlier, there's value in the market, and it's not hard to find. One only needs fortitude and patience in this market. But of course, to mitigate the risk, investors should stick to liquid issues as much as possible. There are some not so liquid names that we like, but and they are worth it, but investors must be prepared to hold. Next slide, please. Speaking of value, no, we can see in this chart, for example, more than half of index names are trading at 12 times or lower in on a forward PE basis. In for selected non-index stocks, the bottom part of the chart, or the bottom chart, sorry, more than half are trading at 10 times or even lower. There are nearly a dozen companies that are trading at 5 times or lower. Of course, not all of these are quality names. Not all of these are companies that we would recommend, but it just goes to show that there is value in the market. Next slide, please. Now, for our topics, as I mentioned, liquidity is now important given that it has come down significantly. So we've pared down our topics to these 7. Not that we don't recommend anymore the others, but we believe that the combination of fundamentals, liquidity, and other factors make these companies our topics. Um, Espinec, for example, is at the forefront of the country's energy transition. Just today, there was news that the Solar Philippines group won about 70% of the capacity that was up for auction in the Green Energy Auction Program of the DOE. If we add this, which is 1,380 megawatts, if we add this to the existing capacity of 450 megawatts, and the 4,000 megawatts that is soon to be awarded by Meralco to Terra Solar. Remember that the 2 biddings were canceled because nobody participated. No? So the Terra Solar joint venture between Solar Philippines and Prime Infra is practically assured of getting that contract. No? So with 4,000 under Terra Solar, with 1,380 megawatts under the Green Energy Auction Program, the Solar Philippines group is well on the way to reaching 10,000 megawatts of contracted capacity by the end of the year. Again, this puts the company at the forefront of the country's energy transition, and it's definitely going to be bigger than AC Energy in terms of domestic capacity, and it possibly could be the biggest renewable energy company in terms of contracted capacity within Southeast Asia by the end of the year. We also like SM and Robinson's Land for revenge spending play. We like GD Cap because we think it is a low risk and laggard conglomerate play. We like ICT. It's the yields per TEU for ICT continue to go up, and because of its very dispersed operations, its geographical diversification is a big positive for us. We like DNL among the consumer names because it's a net beneficiary of the peso's weakness. It's already a net exporter, meaning its export revenues is higher than the dollar cost of its imported inputs, and it's going to continue to grow because one of the fastest growing segments of the company is its exports business. And we like the BDO because for us it's the top bank for the country's economic reopening. Next slide. Now for key trades, for key trade recommendations, we recommend the switch from SM Prime to SM. The chart basically shows you the main reason why. the two these two companies have been moving largely in tandem in terms of valuations for the past 10 years or longer. If we could extend the chart, it's probably going to extend much further. No? And recently, because of SM Prime's decline, the valuation gap has widened significantly. It's the widest it has been on record. We believe that this discount of SM to SM Prime is basically unwarranted, and we believe that this valuation gap is going to close. So shift from SM Prime to SM. We also like switching from BPI to BDO, basically for the same thing in terms of valuations. Um, on Meralco, Lawrence mentioned Meralco earlier. Um, it's bumping up into its resistance zone. So we believe that it's a good time to take profits on Meralco and switch to SFINEC. We also recommend switching from Monde to either URC or DNL, also on valuations, but also because high inflation in the UK. Inflation in the UK is actually even higher compared to the US. So um, consumer spending in the UK is probably going to slow down significantly, and this is probably going to impact spending on alternative meats. We also like GT Cap in favor of um, or against JGS and Aboitiz Equity Ventures, also because of valuations. Now, for on the on the REIT businesses, we like CREET because there is no danger for CREET to lose any of its capacity utilization, whereas for FLI, its office vacancy rate is high and may continue to go even higher. So, and the fact that CREET's yield is higher compared to Phil REIT makes us recommend switching from one to the other. For yield, we like Semirara and LTG. That's it for my presentation. Thank you to everyone, and I'll wait your questions during the Q&A.
All right. Thank you, Sir Nicky, for sharing with us a new perspective on how to look at what's happening in the market. For the question and answer portion, I would like to call on both of them, Sir Nicky and Sir Lawrence, kasi guys, papunta na tayo sa mas exciting part. It's now time to have your thoughts heard and questions answered by our experts, no? Before commenting your questions, kindly grant StreamYard permission to see your name. Drop your questions now. To ask, please type hashtag mighty ask underscore and then your question. All right? So, sige sir. Simulan namin to, sir, ha? Okay. Aaron Ranke asks, for technicals, would it be advisable to start accumulating closer to 6,000 and all the way down, if ever, to 5,700?
For the meantime, 6,000 would probably hold. We see potential upside of around 6,600, but this is really for short-term trading because this is an election year in the US, midterms election, and historically, midterms elections do lead to weak market. So if the US market is weak, we would probably be weak as well. And the election would be in November. So there could be another buying opportunity near or around October to November. So in short, if we buy now 6,000, then we trade it all the way to 6,600, we exit, then we wait for another drop before buying again. That's for trading.
All right, thank you, Sir Lawrence. Now, Jay Brian asks, Sir Nicky, your take on the telco sector, which are mainly highly leveraged due to high capex nature of their business.
Okay, thank you for the question. Let's take this one by one. No, Converge is not highly leveraged at all. So let's take that company out of the equation. Next is PLDT. PLDT recently sold half of its cell towers, and they're going to get about $1.5 billion in tranches. No, I think until the end of the year or by early next year, they'll have that entire $1.5 billion. So that will be used to cut down debt, and at the same time, actually both PLDT and Globe are at the tail end of their capex binge. So as a percentage of revenues, capex is going to come down. Is going to start to come down. Um, Maybe as early as this year for PLDT, and maybe for Globe, it's probably going to start by next year. Also for Globe, it was reported recently that the company is also in talks to sell half of its towers for basically the same amount, $1.5 billion. So um, we're not really too concerned about the debt metrics of these companies because they are aware of it. They are well on the way to addressing that issue.
All right. Thank you, Sir Nicky. I hope we were able to answer your question. Jay Brian, next question from Anna Pernites. Mighty asks, Sir Nicky, why does Keeper keep going down? Also, on technicals, what is the good entry point?
Um, for a lot of or for some companies now, it it really uh, it really makes your head scratch when a company with good fundamentals continues to go down. Um, One factor potentially is that investors might be seeing um, the weakness in sister companies like Pure Gold. Um, Pure Gold is one of those companies that has seen its valuations come down significantly over the past few years. So some investors might be afraid that um, Keeper will follow the same pattern. You can also see the same thing with Costco. No, it's hardly traded. There's a lot of value in Costco, but it can't seem to get off the ground. Now we still like to if the question also pertains to whether we still like the company or not, we do. We think that the company is going to benefit significantly from Filipinos trading up to higher quality liquor. It's the growth um, for Keeper's revenues is actually higher compared to Emperador in terms of domestic sales. I'm sorry, in terms of domestic sales, Keeper is doing better, for example, than Emperador. But simply the share price can't seem to get any traction. Hopefully, um, the numbers for second, third quarter for the rest of the year and into next year will show that Keeper is on track to um, to boost its earnings, and hopefully this will attract more investors to the stock. But for now, um, it's really a head scratcher for us why the stock continues to go down despite strong fundamentals. I think there's a question, Lawrence, for technical good entry point for on a technicals.
Well, unfortunately for Keeper, there's really no uh, chart signal yet. I'm looking at the chart now. There's a large resistance at around 114. So Keeper has to go above 114. Then there's another hurdle, 122. So you want to see Keeper clearing out all this overhang at 114. But if one's intention is to buy as cheap as possible, then there's really no right answer because it's making a new low, and there's no way to know at what point this decline would stop.
Okay, thank you so much. I hope, Miss Anna, we were able to answer your question. Now, this is another question, sets of questions actually. Number one, could you please identify some companies who are heavy importers and or highly leveraged companies with underweight recommendation?
Okay, I can see that there are a lot of parts to that question. So again, okay, let's start with the first one. Heavy importers, for example, are the food manufacturers and the restaurant companies. Um, um, the for San Miguel Food and Beverage, for example, imports uh, the requirements for its beer business. All of it is imported. For example, they import a lot of meat for their meat business. URC imports all of its palm oil, for example, almost all of the wheat. Same with Monde. Um, for the for the restaurant companies, we believe. I think that Jollibee mentioned that about 20% of its inputs are imported, and that I don't think that includes the packaging. Most of the packaging here in the Philippines is also either imported or the prices are impacted by the price of imports. Another sector is the property sector. Um, Most of the steel that goes um, um, into vertical projects are all imported. The price of cement is significantly affected by the price of coal. As mentioned earlier, coal prices are up, and because of the exchange rate, the impact is larger. So cement prices are also impacted by the cost of imported raw materials. Now, in terms of highly leveraged companies, um, there are only a few actually that are very highly leveraged. No? Um, but as of now, what we can say is that the the issue is still manageable for these companies. But if I had to mention some companies that are highly leveraged, these would be the telcos, as mentioned by one of the one as mentioned in one of the questions earlier. Another is the transport sector. Cebu Pacific, for example, is highly leveraged. Megawide is highly leveraged, but as I said, it's manageable for them because most of their debts are have fixed rates already.
Okay, I think we're good with question number one, sir. For question number two, he asks, if the SRO of SPNEC will push through, will my average IPO price be affected if I subscribe?
Well, the first part of that question, definitely the SRO will push through. And second, the rights price range has already been disclosed now. I think it's 160 to 176. Um, so even at the bottom end of that range, if you still have IPO shares at 1 peso, then definitely your cost is going to be affected.
All right. Thanks, Sir Nicky. And the last part of his questionnaires, three questions kasi, do you consider food shortages in the coming months? If ever that is likely to happen, is it advisable to accumulate CNPF at current levels?
If the question is pertaining to like wholesale food shortages, I doubt that that will happen. Um, but if you're talking about specific commodities like sugar, then it's possible, but I don't think that it's going to be that dramatic. The shortfall in our production was like was only like 200,000 metric tons or 200 plus thousand metric tons. That's about 10% of what was produced in the prior crop year. That's significant, but I don't think that that is going to break any of the companies now or the economy as a whole. Whether or not we should accumulate CNPF at current levels, um, I think our view is that CNPF is a good company, and the fact is that the price of tin, which is essential to their packaging, which is cans, no, has dropped dramatically over the past few weeks. I think tin is already lower today compared to at the start of the year. So their packaging costs are going to come down over the next few quarters. So my answer would be yes. It's advisable to accumulate CNPF at current levels.
Okay, thanks, Sir Nicky. How about for Sir Lawrence? If we can accumulate CNPF at current levels, can you recommend a good entry point for CNPF?
Yes, there's support at around 1980 to 20.1. That's the two recent lows. So I think around 20 we can start considering CNPF for buying. Yeah.
All right, thank you. Thank you, Sir Lawrence. Okay, let's move on to the next question. All right, Hyperbots asks, would you recommend cutting losses after buying the dip, then dip it more?
For
Um,
me or Nikki? Nikki, go ahead.
For either, sir. I think you'll both have valuable insight on
yeah, I
this.
think it's more from a trader's point of view, no. But for me, if if you believe in the company, if the basis for buying it in the first place was fundamentally driven, and if you think that um, the basis is still correct, then for me, I would not. I wouldn't cut.
Okay, and then let's hear Sir Lawrence. What do you have to say, sir?
Well, buying on dip is quite tricky because if you buy on dip, you have to know where are the support levels, and if it breaks one of those support levels, then you would have to decide whether to cut loss now and minimize your losses, hope to buy back lower. But I'll give you the textbook recommendation based on William O'Neill. He recommends cutting losses at 7%. That I think we mentioned that in one previous session that we had. So to avoid getting into those buying on dip and getting lower, getting to avoid getting into those situations, what if y- you look at the chart, it start to dip, then you look for reversal signals. You buy only when you see those reversal signals. Yan. That's one way to look at it. There's really no right or wrong. It depends on one's trading personality.
Yes, and the strategy that they're
Yeah.
applying currently for that specific stock. Thank you. Thank you for your answers, gentlemen. Now let's proceed to the next question. All right. Kenneth Ramos asks, what is your take on casino gambling stocks such as PLC, Sir Nicky?
Okay, on PLC, it's not really under our coverage, but for the gaming sector as a whole, our view is that it will be among the last sectors or industries that will be able to recover fully from the pandemic. And this is because um, these casinos used to get 20% or more of their revenues from foreign high rollers or um, foreign tourists, foreigners, especially from China, who come to the Philippines. And that's on the top line. But in terms of EBITDA, I believe that the figure is higher. So the fact that tourism is just beginning to ramp up, it's still a small fraction of what it was before the pandemic. And because of the crackdown um, in Macau and in China and in Hong Kong on junket operators, then the return of these foreign high rollers is quite questionable at the moment. So we're not too keen on the gaming sector. Having said that, the numbers for Bloomberry for the first quarter for Solaire were actually better than we expected. Um, the company has returned to profitability earlier than expected, but still our view is that a full recovery is not in the cards for quite some time. It's probably going to wait until 2024. So we would prefer other sectors other than gaming.
Okay, thank you, Sir Nicky. Let's move on to the next question. For Lawrence, are commodities trending down or it's just temporarily pulling back?
Some of the commodities have come down significantly from their highs. It's hard to say where are the commodities going. Which commodities in particular is are we referring to? Because some are trending down, some are still going sideways. I'll just mention some commodities.
There
Okay,
was
for
no
example,
specific commodities, sir. So,
okay, for example, oil. There seems to be resistance at 130. There was another attempt to rally above 120, but it came down. So oil is currently sideways. Gold. Gold has been consolidating between 1,800 to around 1,900. So gold is in the trading range. Coal. Let's see, coal. Coal prices has come down a little bit from 400 to 380. So there was a slight pullback. I don't know what else. Let's try some of the agricultural commodities. Wheat has dropped significantly from almost 1,300 to 943. So there was a significant correction for wheat. Yan.
Okay. Thank you so much for that, Sir Lawrence. Now let's move on to the next question. At 12 times PE, where would the index be?
At 12 times PE, if we're going to use the market EPS, market forward EPS at the end of the year, which is 500, then uh, the index would be at 6,000.
All right. Thank you for that, sir. So we're down to our last few questions. Just to remind the audience, if you have questions that were unanswered during this time, we will be posting them on my trade map in case there are unanswered questions. So you can join our group, my trade map. We'll flash the link on the screen or in the comment section later on, so that in case you have unanswered questions, you will be able to see the answers in our group. But right now, we'll pick a few more lucky audience members who will have their answers on screen. All right, so let's do this. Ano po ang magiging effect ng IPO ng Prime Infra Holdings ni Mr. Enrique Razon sa SPNEX, sa price and as a company?
Okay. Thank you for the question. I think it's a very good question, actually. If the IPO of Prime Infra pushes through, then it will increase the visibility for Solar Philippines, because one of the main assets of Prime Infra is Terra Solar. And of course, Prime Infra and Mr. Razon have to justify the pricing of the IPO, and they will have to show the numbers for Terra Solar. And when these numbers come out, and I think they will, then it will help boost the the information, help boost the standing of Solar Philippines among investors. Uh, and this is because um, right now, Solar Philippines only has a market capitalization of 13 billion. Um, and a lot of foreign funds don't look at companies that um, don't have at least $1 billion in market capitalization. But given that Mr. Razon owns Bloomberry, he owns, of course, ICTSI, then the universe of potential investors for Prime Infra is so much larger. And when they see that one of the main assets of Prime Infra is Terra Solar, then this will also um, increase the interest, or it should increase the interest for SPNEC.
All right, thank you for that insight, Sir Nicky. Now we have a question from Yafa Johan Bendana. Would you recommend averaging down if it is already negative 30%, or should sell or hold? Can we have insights from both of you, Sir Lawrence and Sir Nicky?
Um, for me, again, like the other question, it really depends on the fundamentals. Um, Sometimes, or a lot of times, the price will run away from fundamentals, whether it's on the upside or the downside. It can go either way. Um, if if you if you want to protect your if you're into capital preservation first, then I think Lawrence will agree that you should should cut loss, and you should cut loss much earlier. But if you have the patience, and if you believe that the fundamentals of the company still supports your um, your investment theory, then um, it's possible that you can average down. Again, um, like Lauren said, it's there's probably no right or wrong answer. It really depends on the situation.
Thank you, Sir Nicky. How about you, Sir Lawrence?
Uh, Depends on why the investor bought into the stock in the first place. If he bought because of fundamentals, then he should reassess whether the fundamentals still warrant a hold on that particular stock. But if he enters based on technicals, then I guess at some point there should have been a sell trigger much earlier than 30%. So if he happens to hold uh, up to if he happens to hold and sitting on a 30% loss, that's really a tough question whether to cut loss. But according to one market wizard, I'm very fond of reading stock market books. According to one market wizard, he said, losers average losers. So what he's basically saying is, you don't average your losers, you only average your winners. Hope that helps.
That's a very quotable quote, Sir Lawrence. Losers average losers, no. But again, as Sir Nicky said, to temper it a bit, it depends on why you got into the stock in the first place. If the fundamentals is good, then you have to be able to reassess your perspective, like shifting paradigms. Nga. All right. So we're down to our final question. So who's the lucky audience member who can have the question answered on screen? All right. It's Pons. What are your takes on ASLAG and SGP?
Okay, on ASLAG, well, for the industry itself, it's in renewable energy, and um, we like renewable energy a lot. We believe that um, this is a long-term trend that will be sustained. No? On the other hand, the the company is relatively small, and the prospective projects on the horizon uh, are also relatively small. It will increase the capacity of the company several fold, but um, we don't think that it will be in the same league as, for example, AC Energy or SPNEC. So if you are going to invest some in the renewable energy sector, I believe that you should go for the leaders. And in this particular case, our view is that the leader for the Philippines renewable energy transition is SPNEC. Um, the payoff is going to be further off into the future than some of our usual recommendations, but we believe that the holding period uh, is very much justified compared to the potential return of SPNEC. Now on SGP, um, it looks cheap on in terms of PE, but the growth factor for SGP is not that great. And SGP is also due for review of its tariff structure. And we believe that, like Meralco, the tariff of SGP is going to be significantly slashed down by the ERC. So there's significant earnings risk for SGP moving forward, and it's not one of the companies that's on our list to be recommended to clients.
All right. Thank you so much, Sir Nicky. And now, could you leave us with parting words before we end the Q&A session?
Okay. Again, thank you very much to everyone who attended this session. Um, the as I said earlier, I believe that the title of the presentation, which is "Shifting Paradigms," is very much um, attuned to the times. We have a change in government. Um, we have a change in outlook in terms of inflation, change in outlook for interest rates, a change in um, the overall valuation for the stock market moving forward. However, through all this change, our message is that there's always opportunity to invest in the stock market. There's always opportunity for you um, to to grow your portfolio by investing in quality companies that we have mentioned here today. So by by taking the time to join us here, I hope that you have learned a lot, and I hope that we have imparted some lessons for you to take away through your that will be helpful for your investing journey.
Definitely, Sir Nicky. Thank you so much. How about you, Sir Lawrence?
Yeah, just a recap of what we said. If the 6,000 level holds, we may expect a potential rally to maybe around 6,600 or 6,800, but I would take that as a chance to trim my positions. Yun. And for those who are interested in learning more about what is happening today, one book that I've been reading the past few days is called The Principles for Dealing with the Changing World Order by Ray Dalio. It's an interesting book, very well written with good data to back up his analysis. That's something worth looking at. Very apt for our title, Paradigm Shift. Yan.
Alright. Thank you so much, Sir Lawrence. May pabaon pang reading si Sir Lawrence para sa atin. I'll ask for the author, sir, later. I follow Ray Dalio also. I just couldn't remember the book, but I'll ask you again later, sir. All right. So thank you so much, Sir Nicky and Sir Lawrence, for your parting words. I'm sure all of our audience members here and maybe later on in the replay will have something to take in their tomorrow in their next trading journey. All right. I'll see you, Sir Nicky and Sir Lawrence. Thank you again.
Okay, thank you. Thank you very much, everyone.
Thank you.
Thank you. All right. Now we're ending our Q&A session. There you have it, folks. But for all our clients who joined the Outlook for the first time, if you want reading materials, guides, and stock recommendations, please join our exclusive Facebook page. As I mentioned earlier, this is the MyTrade map. Here we upload our daily short takes for the consumption of all our clients. And we also answer questions there via the comment section. So again, if you have questions here in this market outlook that weren't answered live, we will be able to answer them later on in the Facebook group. So if you're here and you're not yet a client and you have a question but you're interested in open an account, you can find more information about this by talking to our FB Messenger bot. She's called M, or you can proceed directly to our registration link. It's https://start.mytrade.com.ph so you can begin your investing journey. Alright. Pero bago natin tapusin ang event, di ko po nakalimutan, no? Meron po tayong 5 pang raffle winners to be announced. These 5 lucky audience members will win 500 pesos fund credit to their MyTrade accounts. Imagine, you had knowledge and monetary gains just by joining this event. Congratulations to the following: Hazel Ann Bravante, Job Gamboa, Kevin Ginto, Engracio Ang Jr., Mary Grace Mendoza. Congratulations to you. You won 500 pesos fund credit to your MyTrade account. Again, to claim your prizes, please send us a screenshot of this winner's slide in our FB Messenger so our team can coordinate with you. So I'll give you mga 30 more seconds to do your screenshot. All right? And then you just send this to us to our FB Messenger so we can coordinate with you how you can claim your prize. One afternoon is really not enough to talk about everything, but don't fret. Follow us on our social media accounts. We are on Facebook, Twitter, Instagram, LinkedIn, and TikTok so you can be updated with our latest content to help you in your investment journey. Thank you again for joining us today. I hope you can use what you have learned from our speakers to help you build a better tomorrow. See you next time.